Hey everybody, what's going on? It is James here with Crypto Common Sense, and in today's video I'm going to talk about accumulation versus distribution, and I'm going to talk about the danger of biases. So on the screen right now I have a chart. This is an ETF called RWM, and it is what's called an inverse ETF. Alright, we'll talk about what that means in just a second. But if I showed this chart to most people that have a little bit of knowledge about trading, or more than a little bit of knowledge, and I asked them, are you bullish on this chart or are you bearish on this chart? Most people would say that they were more bullish than bearish. There's not a breakout yet, so it doesn't mean you necessarily want to jump into a position. That's, depends on your personal trading style. But if you had to pick between the two, most people would say they're bullish, because what you've had is this big downtrend, and now you have sideways consolidation. And so again, you have two choices here. Your first choice after, by the way, this is a great big downtrend. Your first choice after something like this huge drop, would be that it's redistribution and going to continue going lower. But again, it doesn't make a lot of sense after this massive drop. If it was back here somewhere, sure. Down here, it looks more like accumulation, where people are actually building positions before the next markup phase starts. And so most people would see this and they would probably agree with that until I told them that it was an inverse ETF, which means that you're actually betting against the Russell 2000. But if I show people this chart, they're okay being bullish on it. But if I show them this chart, they're less okay being bearish. But most people, not all people. So the reason I'm pointing this out is because I'm about to show you a few things about the RUA. And again, the RUA encompasses the majority of the US stock market. And it's critical that you understand what's going on there because, again, cryptocurrency and Bitcoin, while people like to push the narrative that Bitcoin is a store of value, that's been grossly disproven. And here recently, over the last few weeks, it's had this bear market rally. And people have said, well, it's because it's a safe haven. These banks are failing and Bitcoin is a safe haven. I don't believe that narrative either. The pump started right on the same time frame as when CZ, openly admitted that Binance just converted $1 billion in stablecoins into cryptocurrency, including Bitcoin. So that was very much an orchestrated pump. At least they were trying to kick off a pump. Now, some of it's probably retail FOMOing in, or retail traders who have found a legitimate reason to take some kind of swing long. But overall, that move was started with that $1 billion influx of cash, which is very similar to the Fed and quantitative easing and what they did to the stock market in 2020. So the question becomes, will these larger entities continue to pump up and shore up the market as it starts to pull back? We don't know, but what we do know is historically, when the stock market has a bad time, cryptocurrency also has a really bad time, okay? And stocks have actually been pumping for the last few months, consolidating, moving up a little bit, so on and so forth. If I go over to a RUA chart, put this on a daily chart, you can see that stocks stopped falling, right, in the fourth quarter of 2022, and they've actually been moving up. So Bitcoin's kind of had a breather where it had a chance to do something. But if this was just moving down, I have a feeling that Bitcoin would be moving down with it. So there's a few things I want to talk about. There are friends of mine who have questioned me about technical analysis, and they think it's hocus pocus. And they don't believe in it, which is crazy to me considering, the number of calls that I've personally gotten right and the number of calls that other traders get right every single day based on technical analysis. You have huge, billion-dollar hedge funds who rely on technical analysis. You have computer algorithms that have been written around technical analysis and so on and so forth. So for anybody to discount it seems a little bit far-fetched, but the average everyday person seems to still discount technical analysis. So I want to show you all this. This is the Russell 3000 here. And if you put Fibonacci trend extensions on this chart, okay, so if we go all the way back to the lowest point on this chart, which was 1987, and I draw a trend extension, and I draw it to the high back in 2007, And the low, and by the way, if you're wondering why I'm using that, it's because this low is lower than this low. Okay, so there's my high, there's my low. That actually predicted that the market should move up to 2,805 points. And where did the market top at? It topped at 2,817 points, almost dead on. Okay, now, so what? It's played out. The other interesting thing, though, is look at where it tagged. When it did fall back, we didn't know it at the time, but in hindsight, we can see that it actually bounced right off that 61.8. So the reason I'm bringing this up is because this could mean that this was the trend, and this trend is now played out, and it's time for a retracement on this time frame, right? This last 20, 25 years, well, I guess more like 35 years, right? It's time for a correction of this move, right? And typically corrections are going to take it down anywhere from 38 Fibonacci level all the way down to the 61.8 in that ballpark. And so if we take this off and we put those Fibonacci levels on there of this entire move, right, we could be talking anywhere from here all the way down to here. I think it's far-fetched to go down here. We'd have to have an 80%, 85% drop. The only kind of drop that's ever taken the stock market down that far is the Great Depression, which took it down over 90%. Typically, you know, you're not going to see those types of moves. And so that's kind of, it is interesting though. And I'll say this, I'm not being overly bearish here because I think it's far-fetched, but I do find it interesting that these weren't true corrections of this entire move, right? If you really look at it, these were pullbacks in an uptrend, right? On this macro level, this was a pullback, this was a range developed, and then it kept going up, and these pullbacks were 50%. So is it possible that we get an 85% drop? I guess it's possible. I don't know what life looks like with an 85% drop in the RUA. I would imagine it wouldn't be good for anybody. So I'm not rooting for it because I you know, sure, there'd be some cheap stocks to buy and things like that, but I think life as we know it would be drastically changed for the worse. You know, if you go back and look at the Great Depression, most people suffered. So I'm not rooting for that at all, but it is interesting that, you know, the way the chart looks. But even if it goes back to that 38.2 from the top there, that would be a drop of about 69%. That's a really bad bear market. If this does end up being a bubble, right, if this is what we're witnessing here, if this was our disbelief, hope, you know, optimism, so on and so forth, then, you know, like I've been saying for several months now, I believe, and I do believe this, and I'm not trying to be overly bearish like you said, but I do believe that this bounce, this complacency, even when it was down here, I was saying, look, you know, I think we're going to get a complacency bounce. And I think that's what we've been seeing. Now, this chart right here is a 3-month chart, which means that this is a quarterly chart. Well, the quarter's closing in about 7 trade days. At the end of March will be the end of the first quarter, of course. And right now, this candlestick looks terrible. We've got a big wick, which, you know, signals that there's supply there. We've got another wick, which signals there's supply there. And right now, this candle, which is not yet closed, has another wick on top, which is still signaling that there's excess supply. So if this ends up being complacency, that means we're here. We still got all this to go. And we're already down on this chart, currently about 19%, but this pullback was 28%. So again, if this ends up falling, you know, 60%, you know, like those Fibonacci levels, like down to this 38.2, right down in that area, it would make sense from a TA standpoint because it's going to be retesting the top of this range, which is very, very standard market behavior. When you break through a range, you typically will eventually come back down and retest the top of it. But not only that, it makes sense from this point of view, you know, with the bubble chart. Going back down here, and of course your bottom of your bubble goes back to your hope and disbelief ballpark, which is right through here. Okay? And I think it's a little early to start drawing trend extensions because we don't know if this is the top of the pullback here. But if it is, and you put this on a log chart, you know, your 1's going to be down around 1756. Your 1.68 is 1432. I mean, it's a pretty big extension, right, to get all the way down to those levels. So I don't know. This is also a smaller move, though. So when you're looking at smaller moves, a lot of times, you know, non-log charts work a little better. So 1.618 on non-logs down here. There's just a lot of different angles to attack this. And again, the reason I bring this up, I know not everybody is trading stocks, but the reason I bring this up is you've got to understand that Bitcoin, Bitcoin, people look at the Bitcoin chart and say, well, it's always went up. No matter when you bought, if you just held, you would have been okay, right? Other than the last few years, obviously. But the thing is Bitcoin came into existence right around this level, right? Right in this time frame is when Bitcoin first was invented, okay? And it started trading. I think the pizza stuff where somebody bought some pizza with Bitcoin was somewhere around 2010, somewhere in this area, okay? So it wasn't just Bitcoin that went straight up. The entire U.S. stock market went straight up over the last 10 or so years. It was parabolic. And Bitcoin just rode along with it because Bitcoin is a risk asset. And every time this market had a major sell-off, like October, the fourth quarter of 2018, what happened in Bitcoin? Bitcoin broke down from around 6,000 down to 3,000. What happened in 2020 when the stock market broke down? Bitcoin broke down from around 10,000 to under 4,000. What happened in 2021 when the market topped and broke down 28%? Well, Bitcoin broke down over 70%. So you've got to be really aware of all of that if you're, looking at Bitcoin going, well, Bitcoin has always went up. It has a 4-year cycle. All I've got to do is buy it and hold it for 4 years and I know I'll make money. That's what people say, right? It's absolutely not true. It might do that. It might not. But you're basing these 4-year cycles on the last 12 years roughly, 15 years if you're going all the way back to 2008. But during that entire time, the U.S. stocks were in a parabolic bull run. You have no idea and you have no reference point to say this is how Bitcoin will act if stocks enter into a true bear market, not just a 28% pullback, but a true 40, 50, 60% drop in the stock market. And I think it stands to reason that Bitcoin would probably do very, very poorly. Okay, so I wanted to shoot this video, obviously talk about this chart. This is looking more and more like complacency to me, but it's too soon to say for sure. I want to talk about the fact that people get these biases all messed up and they see this and they're not bearish, but you flip it upside down and suddenly they're bullish, right? And by the way, this is an inverse ETF, like I said, which means that if this goes up, it means the stock market is going down, okay? So just a whole lot right now in the markets. I want to tell people to be on your game, use common sense, and use proper risk management, because there were people in every bull cycle who put forth the idea of taking out mortgages to buy quote-unquote cheap Bitcoin. And for some of those people, it worked out because, like if you took out a mortgage in 2020 and bought Bitcoin and sold the top, you did very, very well, for example. But again, you really have no reference point to say what Bitcoin will or will not do if stocks enter into a bear market. And with the Fed and continuing on this path of raising interest rates, which further hurts the economy, it takes money out of the markets. I just think that it's at best a coin flip what happens next, but very likely what comes next will be a lot of pain and suffering over the next 12 to 24 months. All right, so that's the end of this video. I'll wrap things up there. As always, please remember that I am just some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Make sure to stop now and give the video a thumbs up, subscribe to the channel, and as always, please remember to trade safe.